Welcome to the ULI Podcast series, recorded live at the Sea Change Summit in Barcelona, where we speak with our members, leaders at the forefront of decarbonisation and sustainability. In each episode, we dive into innovative solutions, explore challenges, and share insights that are shaping the future of our cities, industries, and communities. Step into the future with Zara Walsh, Head of Valuations and Performance at IPUT, as she shares a bold vision for resilience in the face of climate change. Zara dives into IPUT's ambitious plans to reduce embodied carbon by 30%, the power of an internal carbon price, and the importance of a standardised approach, even when it's challenging to apply. With a long-term outlook reaching into 2060, she emphasises how ESG strategies can create lasting value rather than act as barriers. Hear her insights on managing risks, engaging with occupiers, developers and investors, and the measurable impact that disruption can drive, and why the Sea Change Summit is a critical moment to inspire and accelerate meaningful action.
Hi, I'm here with Zara Walsh, who is Head of Valuations and Performance at IPUT. Do you want to tell me a little bit about IPUT and what you're doing in Dublin?
Super, thank you. So IPUT are a commercial real estate fund. We are one of the oldest funds in Ireland, and we've been around for around 60 years. So our whole philosophy is around creating long-term resilience, and we take a very long-term and holistic approach to real estate.
So how big a part does climate change play in your current strategy and way of thinking?
Yeah, so climate change, I suppose, it is a big part of what we do. We have annual business plans. And when it comes to where our assets are located and the type of assets we're invested in, flood risk is really the big element of what we look at when it comes to climate risk within the portfolio.
So do you focus, are you focusing on physical risks or as well as transition risks? Do the two work together, or are they separate elements of your decision making?
So they're separate, but everything comes together. So transition risk is huge for us.
Yeah.
We have a net 2030 strategy around net zero. And a big part of that is to reduce our embodied carbon by up to 40%. So we start a huge target and we're hopefully going to achieve it because we've created some great initiatives around trying to get there.
How are you approaching internal carbon pricing? How did you determine what the price should be?
Yeah, so we spent a lot of time doing research. It's quite easy for us in one element because we're a single city in a single country, and we're predominantly invested in two asset classes.
Okay.
And 60% of our embodied carbon comes from our development projects. So for us, a really easy way to look at it was to levy on our development projects and all of our retrofits of existing assets. So we looked at, regulation in Ireland, we looked at what peers were doing, and we came up with the internal carbon price. And that sits within all of our development appraisals, our financial metrics, and it actually becomes ring-fenced in its own account. We have a responsible steering committee who look after that, and we use the funds within that to enable change in the portfolio.
So is that, how long have you been doing this? Has it started to feed through into investing that money that you've ring-fenced?
Absolutely. We've been doing it for a number of years now. And I think at the end of last year, we'd over 3 million in the fund. Our fund has an AUM of just under 3 billion. So it's quite a lot of capital that's accreted over time. So at the moment, we've used part of the initiative to set up a responsible supply chain school, engaging with suppliers on the construction and occupier side and educating our supply chain in terms of using and reducing carbon. And we've also used it to buy land. We're doing afforestation in order to look beyond 2030 to 2050, 2060, because we take this long-term view and we're planting our own forestry in Ireland.
Oh, cool. So in terms of carbon pricing, do you think that there's a benefit to having a standardised approach across the industry? Do you think is that something you'd be looking to use?
Absolutely, there's merits in it, in particular looking at the principles. So while it's difficult for funds to adopt it in terms of a standardised cost, but the approach, absolutely. If you look at the new principles that ULI are advocating for. A lot of them is what we incorporated into our internal carbon pricing model and also into our strategy around how we look at carbon. So absolutely having that uniformity of thinking and trying to motivate the industry to change, I think is really key.
Is that something you're keen to talk about at the Sea Change Summit?
Absolutely. I think a huge part of why we adopted it was to enable change and to educate internally and also externally. So by having an internal carbon price, what it does is we have carbon champions within our company. So on each project has a carbon champion, and their role is to educate our supply chain on looking at low carbon initiatives in order to help the built environment.
Okay, so if we talk a bit about transition risks, how are you bringing that into your decision making at the moment?
Absolutely. So we do business plans for all of our assets, and transition risks are fundamental to that. We've probably been looking at them before they were termed transition risk and building in long-term capex. So we see it slightly different to looking at the internal carbon price because we don't use our transition fund to retrofit existing assets. We see them separate. We see the transition fund in order to enable change in the future. But within the portfolio, it's key for us that those transition risks are built in. So we have capital expenditure built into all of our assets at the end of their life. We do life cycle analysis on all of our assets, and we have an internal team that can help us cost it. So we're very fortunate in that regard. But it also means that in our valuations on the NAV, that cost is built into the fund already.
Absolutely. So you've got your 2030 plan, but you're looking much further ahead as well.
We're looking beyond. Yeah. We're always focused almost up to 2050 at this stage. So even new assets that we build in the portfolio over the last 2 years, we have categorizations of optimize, retrofit and reposition. And every 12 months, we have a team that sits down, and it's key to have engagement across our business line. So you have a champion from each department will sit down, look at each asset, look at the costs, anything from operational, physical, climate, social initiatives, and we build that in because transition risk is not just the E part, it's the S part as well, which is a huge driver for us.
So how do you think the industry as a whole is adapting to transition risks as they change? I suppose.
It's a really good question because you have different industry bodies and different landlords with different priorities. So we obviously have a long-term approach, so we can make decisions looking out 10, 20, 30 years. Where the challenge really arises in the industry is some strategies are short-term. So, people are quite focused on short-term cash flows and can sometimes see transition risk as a barrier, and regulation. But I actually truly believe with the help of ULI and the principles and guidelines around it, that actually implementing transition risk, it also creates more long-term sustainable income within it. Hopefully, you've quicker leasing velocity, you're attracting better occupiers, and therefore that should be reflected in capital values.
How do you think the industry should balance sort of long-term returns with sustainability? You mentioned that a little bit, but that long-term view is very important, isn't it?
It is. And if you take a real long-term view to ESG, I don't think there should be a difference between ESG sitting on the sidelines and it's seen as a barrier. We really embrace it. And we embrace it on the occupier side, the investment side, and the investor side too. And having and doing these initiatives, I think, is full circle now. It was really driven originally from the investor side. We're seeing it a lot from occupiers, and not just office occupiers. You're seeing it from retail, logistics as well. So the occupiers become more sophisticated, and people that didn't adopt it and have only started on the journey now, they'll find themselves much more difficult to catch up. You'll see, vacancy, and we've all seen it across the office sector.
Yeah.
But where you're creating long-term value by implementing social initiatives, thinking about people, and people really drive performance. So creating places about people is where you're going to see this long-term resilience and value. So I don't think you can separate them. I think long-term value, it's a key part of it.
Do you think more needs to be done to engage occupiers, I suppose, and property managers as well in these long-term goals?
Absolutely. I think your entire supply chain, whether it's from construction, occupier engagement, needs to be involved. And for us, a key part of that strategy was taking the management of our multi-let assets in-house. We set up our own team, do a lot of training around it. So we have that direct engagement with the end occupier. We've set up occupier green forums where we meet occupiers now. We tell them around our ESG strategy and we try to engage and understand their needs as well.
Absolutely. I mean, do you think you need to be, I suppose, both listening to them but also encouraging them, sort of giving them a bigger driver to change?
Absolutely. And one of the key things is showing people examples. So our property managers are really a big part of this. Their key role is to manage and coordinate the data and then help us in ways that we can reduce EUI. And when you meet a tenant and show them initiatives that we've rolled out, it then encourages them, because what you're looking for is to reduce EUI and hopefully then create longer term value through higher rents in the asset. But occupier engagement has been a really crucial part for us, and they've really come on board with that.
Yeah, I mean, you don't want that relationship with an occupier to be a barrier to decarbonisation.
Exactly. And it can be seen as a barrier in the past. Initially to do works to change lighting to LED, there is disruption with tenants to do that. But actually all of the feedback has been extremely positive. Once they can see a measurable impact from it, you can get real engagement.
So, last question about the Sea Change Summit, really. I mean, do you think that the level of engagement here and the different subject areas talked about sort of shows that the industry is moving the right way in terms of decarbonisation?
I think what ULI are doing is crucial with Sea Change as well, in order to educate the industry. I think education is key. You have different funds that are on a journey and at different levels of that journey. So having forums like this where we can engage with people across the industry, from occupiers, investors, fund managers, and knowledge sharing is absolutely key. And I think that's what we find a huge benefit of being involved with ULI.
Absolutely. I mean, because you're based in Dublin, but I mean, you're going to have investors, you're going to have with people from all over the globe, aren't you, with different approaches to decarbonisation. So
absolutely.
having that conversation.
Yeah. And 50% of our investors are global.
Yeah.
So having the engagement here, learning from them, learning from what other peers in the industry are doing is what drives you to continue to do better.
Absolutely. Thank you so much.
No problem.
Really
Thank you.
your insight.
Thank you for joining us in this insightful conversation. It's clear that tackling decarbonisation and driving sustainable change requires collaboration, innovation, and a unified vision. Together we can learn from diverse perspectives, share best practices, and take actionable steps towards a more resilient and sustainable future. Stay tuned for more episodes as we continue to explore how leaders across the industry are shaping the path forward.